All right, what's up, guys? Good morning and happy November 20th. We got Thanksgiving when? Uh, a week from tomorrow. But all right, folks, good morning. We'll kick it off here with Bitcoin. And right now in the rooms, we are long Bitcoin. So we're trading this through the MBT, the Bitcoin micro futures. I came into today with 4 contracts. I took off one of them this morning at 95K, and I'm going to hold on to the other 3 for a push into 100,000. So taking a little off this morning. But yeah, I mean, really big time breakout, big time move off the weekly squeeze. Look how good the indicator catches it too. All right, the squeeze starts all the way back here, end of June, early July. Okay, so all throughout July, August, September, October, November, you've got this giant weekly squeeze. They don't do anything with it until we get the white arrow, which means at that point everything is coming together. You have a good structure, you've got a good trend, and you finally got some good momentum. That all kicks off a nice push, and bigger picture versus short term here with Bitcoin. Bigger picture, I think the breakout of a range that big should put Bitcoin in a good spot to trend higher. All right. Now, the definition of trending higher means, we'll push, we'll make a higher high. Then eventually, you got to get some kind of kickback. Right? It could be a pullback to a 21 EMA. Right? They'll flush it. You'll make a higher low. They'll push it. You make a higher high, and they keep that pattern going for as long as they want to. I think a good chance, bigger picture, you could get some of that action. Given the breakout here. Shorter term, you're a little bit overbought. Trades around the weekly 3 ATR. If you look at the daily chart, same thing. You're right near that extension. Could be a spot for a pullback, or it could be a spot for, maybe they do want to take it another $4,000 or $5,000, smooch the 100K, and then maybe from there you get the bigger pullback. I like it all the way down to 80,000-ish. My preference, of course, is from here. They do kick it off into 100K, but a pullback into a 21 EMA, I think makes for a good buying opportunity if you get one. So we are long Bitcoin, and then from here we're going to move on to NVIDIA, the big man on campus. I think NVIDIA could be really, really big. Not just for NVIDIA itself, but looking into December, January, February, March. I think it could be a big deal for Broadcom, TSM. Let me go grab. Let me see, and I'll show you why I think that. But if we go to etfdb.com, we pull up the SMH. All right, so if we look at the top holdings in the SMH, number one, big dog, of course, NVIDIA. Now, NVIDIA makes up about 25% of the entire basket, which to me means what? For conversation's sake, NVIDIA has earnings tonight, and then tomorrow morning, we're waking up to a 10, 12, 15% gap higher. To be clear, I'm not saying we're going to, but to get you thinking, we get a big gap up in NVIDIA and it runs. What do you all think that does for the SMH? Now, admittedly, I think NVIDIA looks a lot better right now than the SMH. But being that NVIDIA makes up a quarter of the basket, if they pop it and rip it, that's going to do a lot of good here for the SMH. Looking a couple of months down the road, if they can ever fire that squeeze to the upside, the weekly squeeze here on the SMH, you're looking for a move into 290, 300. All right, now think if the SMH can run for another 60, 70 bucks, never mind NVIDIA, what do we think that does for the other top holdings? TSM makes up 13%. Broadcom makes up about 8%. I think for the most part, you watch those three: Nvidia, TSM, Broadcom, and then you got the AMDs, the TXNs, AMATs, Qualcomms, etc. My thinking is, if then statements, if Nvidia gaps up and runs, going to be great for the SMH. If they can get the SMH moving, should be good for Broadcom and TSM. Short term versus bigger picture. Get a good pop at Nvidia tomorrow. I think the idea of look at Broadcom, and the key here is you have to size these as a lottery trade. Nvidia could totally bomb tonight, and they're gapping it down 10-15 tomorrow. Right. But for conversation's sake, if Nvidia beats and they're gapping up and breaking out, you could go look at a Broadcom here. One way to play Nvidia earnings, go to Broadcom, go to this Friday's expiration. You could buy even a 170 call. Grab it for $1.25, $1.30-ish. If Nvidia gaps up, I don't think asking too much here for Broadcom to try to fill the gap. They maybe even get it back into the 21 EMA. If Nvidia goes well, that can be the short-term reaction. In Broadcom, TSM, etc. Looking a bit further down the road, and this all kind of lines up as far as timing with the SMH. Broadcom also has a big weekly squeeze. All right, so at the top of the SMH hill, let me draw a hill here. Up here, of course, you have Nvidia. Numero uno, the big boy. Where that goes in a big fashion, you look for Broadcom, TSM, etc. to all follow suit. The opposite could all happen. They hammer Nvidia. Not going to be good for Broadcom, not going to be good for TSM. But bigger picture, I'm looking at Broadcom in a big weekly squeeze. I'm looking at the SMH in a big weekly squeeze. But for one, it kind of has me thinking as a group, they haven't even woke up yet. Like, yeah, Nvidia's made a nice move. It's been doing good work, but the group itself, we ain't getting anything right now, other than a big old buildup of energy. Might be a month down the road, might be 5 months down the road. Eventually, they're going to fire the weekly squeeze. If they fire that long, I think you get the SMH into 290, 300. They fire the thing short, we can get it down to 200 or lower. Right. And on that path, Nvidia, Broadcom, TSM, right, they're all going to work together. So the king of the hill with earnings tonight, big, of course, for Nvidia, but I think bigger for the group and a few of those top holdings. So that is that on that one. I'm not sure what the pricing in for an expected move, but we shall take a peek later. Moving on from Nvidia, Mama Market herself. Looking at the NQ, we've had a good amount of back and forth. You had the election pump, you had the pullback, and now everything's just hanging out, trying to figure out the next move. When we look at the weekly squeeze, which, hey, for all I know, this all changes tomorrow. But for now, when I look at the weekly chart, the only thing I can think is that everything's trying to go much higher. If the white arrow disappears, meaning at any point if the weekly squeeze is no longer an A+ setup, I've got to change the opinion. But when we got the white arrow back there, right, that kicked off a nice multi-month move. We got it again, that kicked off a nice push. Just because we're getting the same signal never guarantees we're going to get a similar move. But trading is a game of probabilities. Until the white arrow vanishes, probabilities favor they want to take that squeeze, try to get a move going into 22,000, maybe a bit higher. Go look at your QQQ holdings, right? Nvidia really matters. Nvidia's gapping into 160, 170 tomorrow. That is great for the NQ weekly. That might help it take out the high and fire long. Nvidia's getting slammed tomorrow, the opposite. But at the moment, doesn't mean I'm waking up every day and buying every call out there, but I can't be bearish. Yeah, maybe look for a day trade short, maybe look for a quick scalp. Until that signal disappears, it might be this week, might be a month down the road. I've got to think there's a path into 22K. If that is the outcome, what happens to your Googles, your Nvidias, your Apples, your Amazons? They're going to get some big time wind at their back. So jump over to an Apple. And right now in the room, we have the 240 calls for January. I'm trying to get a move into 245, 250. Right now, Amazon or Apple, rather, building up a lot of energy. No guarantee it goes higher, no guarantee it goes lower. But, one thing's for sure, it's fixing the busted move. A huge part of the path forward for Apple is going to be the QQQ. They gap up NVIDIA tomorrow. They gap up the QQQ. That's going to help Apple get it going. 4-hour squeeze, a daily squeeze, a 2-day squeeze, a 3-day squeeze, and a weekly squeeze. They all begin to fire long. I think it's a $250 stock. They all fire short. Right? NVIDIA is a total dud tomorrow. Then I think you get the opposite. Below 220, I want to get rid of my calls. I don't think anything good happens for bulls below the weekly 21. If they can keep it above that and keep on making a little progress, I'm not only going to hold the trade, but eventually try to find a spot to buy more. January expiration 240 call. Next up is Tesla. We were talking about this one in my room yesterday. I think the action is really it's very much par for the course. Gap it up, pump it again, pump it again, pump it again. At some point, guys, you got a lot of Johnny come latelys. They want to jump on the bandwagon. They want in on the action. And they're buying the 390 calls, 380, 400, 415. We never know exactly when, but we know at some point we're going to get the flush. Now, the flush on Tesla changes nothing. You go from 360 down to 300-ish, but nothing changes as far as the signals. Nothing changes as far as the structure. If you're bullish on Tesla up here at 360, I think you should be more bullish down here at 305-ish. You even look at an hourly chart. Don't get me wrong, you're buying calls up here. The pullback is not any fun. But a big part of the game is just picking your spots wisely. You're buying those calls up there. You got to know one morning you might wake up. It might pull back a little bit. It might do the unthinkable and take a little bit of a chill pill. But they don't break structure. They're not getting sell signals. Now you are back above the 21. Perfect score and a buy signal. Through 350, I think they keep on pushing. So what I would like to try to find today, and I got to ask myself, we all got to ask ourselves, how much exposure do we want on the table before NVIDIA? If I put 1% of my account into a Tesla trade, and then tomorrow NVIDIA takes down the entire market, it's not my preferred outcome, but I'm not going to be out of business. If I put half of my account into Tesla calls, and then it all goes bad tomorrow, it's going to be pretty damn painful. So be mindful of your exposure. But I would look for things like this. Go look at an hourly chart. You're above the buy zone. Then they work on a brand new 5-minute, 15-minute, 30-minute squeeze. 350 could be a tricky level. But I would like a lower time frame squeeze to anchor to, then try to call for any push through that. Next up is the one they call the Zon. The big bad Amazon. I'm not going to lie. A couple of days ago, I felt like I might have missed the entire bus here, and I definitely did miss the initial part of that move. A lot like the chart of Bitcoin, it's a very long weekly squeeze. I think a weekly squeeze might last for the compression phase, the build up, the energy phase, maybe 5 6 weeks. Amazon takes you for a 23-week ride. June, July, August, September, October, into November, doing nothing other than building up the energy. That being said, I would like to think, when you finally break out, when that squeeze finally fires, 23 weeks later, that should kick off a nice move. Now, maybe that's all she wrote. All right, they pop it up, they pump it, and then you're back down to 200, and that's pretty much the end of the show. That might be the case. That'd be very lame in terms of what I think you could get from that big of a weekly squeeze. I think 220, 225. Even that is not asking too much. The key level here, of course, is $200 on the dot. If you're bullish on Amazon, I think the last thing you want to see is a couple of weekly closes back in that box. At that point, I think it's giving back a little bit too much of that progress. I don't mind to pull back to 200. Right. Big breakout level, push it, come back and back test it. I don't mind a little chop around the 200 strike. We don't want it closing on Friday below that level. Right. This week, next week, the following week. If they can hold the line, I think that that 221 EMA level, there's your new buy zone. A, can they hold it? So far they do. B, can they cancel every sell signal? So far they do. Next thing we got to get here are some buy triggers. Right. I like that daily chart a lot. It paints a pretty bullish picture. Good structure, good momentum, buy signals, good score of 13. Then I look at my 4-hour chart down to a 5-minute. They're all neutral. If we can get a 15-minute buy signal coming through, a 30-minute buy signal, then I think you get a little lift off of that 200 spot. So we're keeping an eye on that bad boy. And then Google here. Go back even a month ago. Google not looking too hot. Crappy structure, no momentum. Pretty good turnaround here. And then check out the weekly. Brand spanking new weekly squeeze, which means we're early. They might take it into 195 next week, but in most cases, they got to get another couple of weeks into compression. Keep on chopping it, keep on building up a structure, build up a little more energy, then they go for the push. But they'll go for it when they want to. We've got the blue arrow. That makes that the slingshot squeeze. Right? Really good trend, really good structure. Everything lines up for a push towards 195, 200, except momentum. We've got to get the MACD down there back above zero. Now, let me show you a few examples because I think it's so important. We have timing and we have direction. Two things we're always trying to call for as traders. Well, I can look at the weekly chart in an uptrend with good structure, stacked EMAs, a score of 13. I can call for direction. I think for now there's a better chance that fires to the upside. What I can't tell you is whether or not that's going to be today, tomorrow, next week, or in March. We have to get that MACD turn. Now, one recent example, like I mentioned, whatever indicators you use, right, you want something for structure, something for trend, and then something for momentum. All throughout back here, right, June, July, August, September, October, The analogy I like is it's a Ferrari with no gas in the tank, meaning good looking squeeze visually. Right? The EMAs are stacked positively, 21 above the 50, 50 above the 200. It all looks and smells pretty bullish. Looks like a Ferrari. Then I checked the gas tank, right? And from June, July, August, September into October, we've got no gas. I woke up, somebody dropped off a brand new Ferrari in my driveway, and I can't do anything with it. I can just sit there and admire it. Timing, right? I don't want to buy, and you get different styles of trading, of course. I don't want to buy Bitcoin back here. May of 2024, and then they're finally paying me all the way in here in December. I want to buy it and get paid a little quicker. So notice, nothing happens until momentum finally crosses back above zero. And then for the first time in months, you finally get some action. Little gas in the Ferrari, and we're going for it. That'll be the key on the Google weekly chart. We have everything except that momentum cross. Now check out Google from the 4-hour. This is going back a bit. Notice, all right, early June, mid-June, end of June, early July, we're in a good-looking 4-hour squeeze. Structure's bullish. The EMAs are stacked positively. You got a good uptrend. Everything looks like you want to call for direction higher. But man, if I'm buying those calls back here on the 3rd of June, and then a week goes by, 2 weeks goes by, 3 weeks goes by, I might be right on direction, but I'm not that accurate on my timing. What's missing all throughout that period? Momentum. The MACD breaks back here, trends lower, hangs out below zero, crosses positive, off goes Google. Now, here's the danger of that kind of setup. Look at a, oh, God, what was it? I'm trying to think of a really good example as of late. Maybe it'll come to mind, but you all know where I'm coming from. The Google weekly chart, not one I'm going to buy in a big rush, but one I've definitely got to keep an eye on. Was it Starbucks? Yeah, so look at Starbucks. The daily squeeze starts back in October 4th. We're going on almost 2 months. You enter a daily squeeze, and we're trying to push, and we're not breaking out. We're going up, we're going down. It looks bullish. You don't have any momentum turn. I've tried jumping in early and buying them on that signal. Like, all right, I got everything but momentum. I'm going to jump in. I'm going to front run that momentum cross. And then I'm caught in, a multi-day, multi-week absolute chop fest. Nothing makes me crankier. But all right, so there's Google. We looked at Apple. We looked at Amazon, Nvidia, Tesla. Few names I don't think look all that great here. One being Microsoft. I would not be in a big rush to buy that one. And then Meta. And for full transparency, I'm long Meta. And for more transparency, that might have been my crappiest entry of the entire year. No exaggeration. It's got a call wall up here at 600. If you follow Spot Gamma, you know the call wall is it's a brick wall. Right, and 1, 2, 3 times in a row, they spank it lower. I came in on that candle and bought it right under the brick wall. Maybe not a trade I want to fall in love with. And then they hammered it lower. So out of my 3 trades, that is the dud. I'm liking Apple, and I'm liking the Bitcoin. And that is the bulk of what I got for you, folks. One more that I'd like here would be net, N-E-T. I might not get my entry today, but I like the 4-hour squeeze there. I like the daily squeeze, and I like the weekly. Very clean. Home Depot's on a couple of the scans. I wouldn't put it before net, but maybe one to keep in your back pocket. But that is that, my friends. Any questions? Anything y'all want to look at? I've got a couple of minutes to hang out, and then I got to jump on the mic with the folks in my room. Let me check my Bitcoin real quick here. Now to continue that discussion, the 4-hour on Bitcoin. And here's how I know this little pop from 88,000 to 95,000. That's nothing. I look at that as noise. Reason being, have they fired the squeeze yet? No. Have they even crossed momentum? Well, they haven't done that either. We're not even knocking on the door of getting the full potential from that 4-hour squeeze. If they can hook momentum, then I think you get your push into 97 or 100. Right. But again, it's been a lot of chop here, and I think that's a big part of it. All right, Patrick's got IWM, and Nick has got some Mobileye. Yeah, Patrick, the small caps here, they're interesting. I must admit. Now, this might be more of a me thing. I've always found it a little tricky to trade. But again, that could be me. I like the weekly. Can't say anything bad about the weekly. Squeeze, buy signal, perfect score, and a target of 250-ish. That weekly squeeze, it sets the stage for a move into 250. In the short term, the question would be, do we have any alignment? Meaning, does everything inside that weekly squeeze confirm that kind of thinking? Daily chart with a 12, back above your 21. What I would do on my end, and if anything, they're making my job a little easy here. I'm going to mark up the daily 21 EMA to 229-ish. And now moving forward, that's going to be my line in the sand. They break below it, close below it. I don't want to be long IWM. Doesn't mean I have to short it. But if I want to call for a short-term path into 235, 240, maybe higher, at a bare minimum, they've got to hold the line there. Above that 21 EMA, then it can serve as a launching pad. There. We got the rocket ship on the launching pad, then we can take liftoff. Something's got to trigger the liftoff. We got to get a little oomph going. The oomph would come from, now you're getting a 15-minute buy signal. Then you get a 30, then you get a 1 hour or 2 hour. If everything can align for a push higher from the ground up, that can get that weekly squeeze going. I love the idea of buying it down here, way more than I do all the way up here. Good way to look at it. They gap it up, they push it. They pushed it towards the target. They flush it back down to support. A lot of retail traders buy it up here. A lot of the quote-unquote smarter money, they're buying it back here on the kickback. So I would look for a trigger above that 21 EMA. Next up is Mobileye. Not that it matters. But didn't Mobileye get bought out at one point and then they returned from the abyss? thought I remember them getting bought out back in the day. All right, let's take a look here at the Mobileye. At first glance, one thing that is definitely lacking: short-term trend. Compare that to a Netflix. Well, short-term trend for Netflix is very bullish. Right? We rally, we pull back a bit, we rally we rally a bit more, we chop. The overall path of least resistance is definitely to the upside, where for Mobileye, you take the 40,000 foot view. Yeah, the trend's been a little bit more bearish as of late. To me, that makes this more of a bottoming formation versus an object in motion staying in motion. Right now, MSTR, that's an object in motion staying in motion. In other words, we're trying to get Mobileye up off the floor. So a couple of keys there. They have to hold it above the daily 21. Nothing good happens for bulls below that level. And then the clarity for me would come from my lower time frames. The way my indicators work, it's going to be a very, very long time until my Mobileye daily chart looks bullish. Bullish to me means we're above the 21, we're above the 50, we're above the 200. Well, that's up here at 23. I need stacked EMAs. It's going to take a while. That doesn't mean there can't be a few spots to play it from 16 all the way into 20 and change. I'd have to find them across my lower time frames, though. We got a 4-hour squeeze and a fresh buy signal. I could work with that. I like the 30 even more. So there's my clarity. 30-minute squeeze at the buy zone, buy signal, and the perfect score. I'd make that my entire focus. I can look for that on a 4-hour time frame, a 2-hour, a 30-minute, a 5-minute. But there's my clarity and there's my edge. I can't get too much of that from a weekly chart or a daily chart here, but I can get it on these lower time frames. What I want to do now is ideally I trade that 30-minute squeeze near a bigger, more meaningful level. Could be a daily 50, could be a daily 21 EMA. I'd watch the 30-minute squeeze here at the open. Looks like it got a 15-minute as well. All right, y'all, a couple more minutes here, and then I got to jump into the next spot. Hey, good morning, Grace. Good morning, Chris. Yeah, Grace, both you and my wife. Yeah, it's like I got to start hedging myself. I got to buy Amazon shares and just hold them because it seems like every hour there's another truck pulling in. My wife is doing her part, guys. She's making her contribution. If you're long Amazon, you can write her a letter and thank her. Yeah, Grace. So a quick basic definition of a call wall. And let me grab spot gamma for you. If you YouTube search spot gamma simpler trading, Henry and John have done a couple of good videos and webinars of these guys. Let me go grab it. Spot the gamma. All right. All right. So if I come in here and let's look for Tesla. Y'all might have heard of that one. All right. Test. Come on, computer. Well, better yet, Apple. All right. So Apple has a call wall at 235. So go pull up the old Apple. All right. So call wall up here at 235. All right. Basic definition. Until that call wall changes, Right, could drop down to 230, could be up here at 240. That level can become one of two things. Right? It can be a magnet. So good recent example is Meta. On Meta, you have the spot gamma call wall up here at $600. Now, when you're under it, right, maybe you're at 560, 570, 580. That call wall can make for a giant magnet, meaning they want to pull price right into it. You had that back here, right into 600. They did it again, and they did it again last week. It can be a magnet, pulls price directly into it, but then when you get there, it can also be a giant brick wall. Now, to me, where is that helpful? Avoiding trades like the trade I took last week. Well, if we got a call wall at 600, and we have now failed 3 times in a row at 600, maybe I don't got to be the guy to buy it again right at 600. Let them break it out, make them prove it. It keeps on drawing price up into it. They can't quite turn the corner, though. Right? Magnet and a brick wall. Apple has a put wall down, I believe, at 220. The put walls act just the same. Apple gaps down, it's getting ugly. Broken structure, a bunch of sell signals. Like a magnet, they pull it right down into 220. But then, like a brick wall, they can't quite get through it. And what you'll find is when they finally break through these call and put walls, that can usually open the door for a nice move. Netflix is maybe the best example from this year that I've watched. For quite a while, you had a call wall at 700. And they try once, twice, 3, 4, 5, 6, 10, 15 times. They can't get through the call wall. They finally do. It opens up almost a $200 path higher. But until they broke it, anybody buying it at 695, 700, they keep on getting hammered. If anything, when I'm back on the mic for this on Monday, Grace, if you can come back next Monday, we'll talk more about these levels here, and I'll show you a few of them on the things that I watch. But if anything between now and then, go on YouTube, do a search for Spot Gamma Simpler Trading. We got a couple of good free webinars there. But all right, folks, I've got to run to my room. One more piece of housekeeping for you. We are doing the Black Friday sale, so head to the website, and then should be right here. Yeah, head to the website and then click on that tab. If you've been looking for any indicators, any classes, any memberships, Henry's got some good stuff. You got Roggy, you got Trendy, JC. You got that sketchy fella right there. Check it out, 30% off. All kinds of good stuff. But hey, thank you as always for your time. I appreciate you all being here. Have a great rest of your Wednesday rather. Get the popcorn ready for NVIDIA, and I will catch up with you over the weekend. Adios, y'all. Thank you again.